Hello, everyone. It is 8:01 a.m. Chicago time on Tuesday, the 27th of March, 2018. Thanks for joining me again and again and again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market continued its move up. The expectation was it would push to 26.76 at least overnight. It pushed to 26.79.75, just short of the next one of my next stock zones, which is at 26.80 and a quarter, centered with 79 to 81 and a half as the range, which puts us right up against the point of control of Thursday in the S&P. We'll go through that analysis in a minute. The market is allocating to risk yet again this morning. The DAX leading with 237.5 points. The DAX is flirting with 12,000 on the index, up 2%. The Euro stocks follow suit, up 54 points, up 1.7%. Crude oil trading at 66.19, up 1%. Crude continues its move up. It's been on an uptrend lately, followed by the Nasdaq. The laggards today are gold, down 12 points, or almost 1%. Gold's trading $1,342, and the British pound, as well as the euro and the Japanese yen. So the biggest safety assets, the major currency pairs, along with gold, are down. So clearly, the market is in a risk allocation mode. As far as what we expected yesterday versus what we got, and yes, I am fighting a bit of a cold here, cold or something. Here's what we expected yesterday. The first The first plan, the first scenario was for a dip down into 26.15, find a base, and then turn back up. The target would have been 26.41. That was the primary plan. Now, the market didn't give us that until later. The second scenario, which I talked about yesterday, I really suggest you go back and listen to that part of the broadcast. The second scenario, where I said there's a much better opportunity to trade, was spot on. Again, this is not often the case. They don't always work out this way. But I was looking for a pop to 26.35 or thereabouts into the crowded area from Friday. And then I was looking for a drop into 26.03, as you see this stock zone here, 26.03 and a quarter. The stock zone, this is from yesterday's image pre-market, so this isn't something I shifted today. This is just an image of yesterday's trader bite. That stock zone extends from 26.02, which happened to be the low of the day, to 26.0450, which is where I exited the runner on the short. So the market did just that, and then it turned right back up, and I issued several warnings in the Convergent room that it's look out above, caution shorts. Once that happened, once we hit the low, we immediately saw buyers coming in pretty strong and pushing through pretty much every resistance area that had been established. So here's what actually happened. Very busy. This is on a full Renko. There's the push up. It pushed through the 35, went to 39, which was an established stock zone, by the way. And then it turned down, and it bounced off at 20. Could not regain the mid, which would have been nice here. Then it moved down to 15, which was a key test area. Remember, scenario 1 was to move to 15, was expected to move to 15 and bounce back up. It moved into the 15 stock zone, and then it pushed right through into 2603, 2602 being the low. This zone here was not moved. It doesn't need to be. And then you could see that it started to really push higher, the rotations. And I pay, you know, this is not just noise. These numbers here are zigzag rotations. They tell me what the magnitude in points is for each rotation. And then as soon as we hit that 2602, the rotations to the positive side became much bigger. And that's when I issued the warning. The last opportunity to short was right here against the mid. Again, the mid is this blue line right here. The mid is defined as the high plus the low of the session divided by 2. It's basically the average of the sessions, high and low. And that was a pretty decent short there, worth about 6 or 7 points. And then it broke through, pulled back to the mid right here. Beautiful setup. And then pushed right into and through the opening swing. And then we had a neutral extreme up. Neutral extreme up day. This is not a trend day. It's a neutral extreme up day. The implications are that the market is done with this area down here. Unless, of course, there's more tariff news or something. This area down here is not likely to be seen in the short term. We're likely to continue higher and head towards the 2700 figure from here. This is what it's saying. Basically, what the market has done auction-wise is we have dipped and tested to see if there are any interested buyers into Friday's range, and we found them at 2602. And once we found them, they were relatively active. But more importantly, if you look at the delta, see this delta here? It remained negative for the session. What this shows is more shorts getting squeezed and getting pushed out and receding, kind of like my hairline when I was 19, very quickly receding with no real volume to follow. So had this been aggressor buyers, like very aggressive buying, that would be commensurate with the amount of range that was covered from 2602 to 2662. We had 60 points of range yesterday. Had this been an aggressive buy push, we would have seen a positive delta at some point. But if the offer is pulling back and pulling back and pulling back, and they're lifting with not as aggressive a size as the selling that morning, this leaves us with price that moves higher quickly with a delta that is lagging. So this isn't, the move up does not show as much strong commitment from the buyers as it does a lack of commitment from the sellers. Does that make sense? There's a very specific distinction there that we need to be aware of. In other words, if I'm a seller at 2640, and I see the market coming up, and I'm still a seller, I still want to sell. I still think the price should go lower, and I still want to sell, but price is coming up, and I see an opportunity to sell at 2660 or 2700, and I pull my 1,000 lot, and I pull my 1,000 lot instead of letting it trade because I want a better price. That doesn't mean I'm not there, I'm not present, and I'm not ready to sell. It just means that I believe I can get a better price. And if I pull my 1,000 lot, then you as a buyer cannot lift that 1,000 lot to improve the delta, to increase delta, to raise that number. I'm pulling my order, so there's nothing for you to trade against. And so you have to reach to the next price up, 2641, 2642, whatever. But I'm still there. It's just that I'm pulling my size as a participant, as a major participant, and so the delta is not affected, right? So you could see the delta here did not regain its composure from the opening print. The opening print was 30 points lower, 32 points lower, and the delta could not come back to zero. So this is important to watch. Now, I looked at this as a short squeeze, but this is more a short spook. As price moved up, the shorts are like, no. And just keep raising and raising and raising their offers without trading out. And that's what causes that kind of response. So that was yesterday. Let's look at the overnight session and what we did there. The overnight reopened. We went sideways until the Asian session open here, and we started to climb. We never looked back. The inventory is 99% long this morning, and we continue to push up. Again, my expectation was for 26.76 right here. We pushed 26.79.75 right into the next stock zone up. And we're pulling back at the mid. The point of control is above us. We have almost a double distribution, but what we really have here is a P-shaped profile. Again, short covering. So we are squeezing those shorts out. The volume in the overnight session is about twice. It's at 212. It's about twice what is common. So it's a fairly active session. But check this out. The closing price of the prior day is right here. We are currently trading 26.67. We closed at 60.50. We're up 7 points. This is a 7-point delta here. Okay. Look at the volume delta. Just could not. There's no lift off here at all. Even if I expand this scale, you'll see that the delta is just not with it. Right? The delta is just not with it. We're already at negative delta with a 7-point positive gap. So the participation is not so great on the buy side. We'll see what happens today. I expect today to be a resting day. It's behaving that way. So what's my expectation for today's session? Let's turn this off. Kaboom. By the way, we are trading, the market's trading around itself right now. Let's change the scale to 120. The market's trading around itself. So these days now, because the market has bounced up, these days now become a microcomposite. So I built a microcomposite, and the point of control of that microcomposite is at 26.4475. That becomes an important balance area, and it's what's traded a lot in this zone, and it comes really from Thursday's trading right here. But the most valuable price in these last 3 days that we're trading through now is 26.4475, and that we're expecting that to be a magnet as we push back into yesterday's range. That is likely to be the key magnet below. This morning we're opening in a small gap. We have about 15 minutes to the open. I expect an open auction that attempts to push higher, but I'm expecting us to push back in 26.44, consolidate through here, and hold steady sideways as the primary scenario. I'm looking to sell this pop up on the open. Why? Again, I'm looking for this to be a rest day. We've already done some of the work in the overnight at 26.79.75. I'm looking for the overnight low to break. I'm not seeing a very, very strong commitment. Very, very strong commitment from the buyers at this point. Alternatively, we do get an open auction that drops into an open auction, open rejection reverse, that bounces up off the point of control and starts shifting through the overnight high. Let's get the stock zones back in here. The overnight high to start making its way through what was Thursday's profile here. Gets tangled up in the point of control, and we hold steady. So that's Instead of a sell scenario, I'm looking for a buy scenario. That's just a function of how it trades against yesterday's point of control and stuff. Look at how sharp this point of control is here. A lot of participation at the high yesterday on that neutral extreme. The tertiary, the third scenario is we push up, open, a quick push through to the 2686 area, and then we fail through the open. And this I'm looking for 2644 again, like scenario one, but one that actually continues lower to a better base around 2629, 2629, 2627 before it bounces back up. This is another sell scenario. So what am I going to do for the open? How is this actionable? What I'm going to do for the open is just sit tight again, monitor to see who is in control, and then step in against my stock zones, against my areas where I intend to do business. That's what a stock zone is. I intend to just wait for that to take place. I kept the review screen up. I need to get rid of that and just do it all on one screen. Just wait for my key areas and see how the market responds in these key areas where I expect a reaction. I don't know which one of these stock zones is going to get a reaction, but it gets my attention in those areas. And then I move over to the depth and I monitor for these bigger, maroon, dark yellow, orange areas. As the market moves into those stock zones, these are the same stock zones here that you saw on my chart. They're translated into the depth, and I'm looking for how the market responds and how the depth responds, as well as the order flow, and then act. Okay. For those who are part of Convergent in the room, I posted basically an anatomy of a trade live or in real time yesterday, so you can follow that logic and see how I'm stalking the scenarios and then managing the trade. There are lots of images in there. I'll leave you with that. Again, don't forget to win the day. Define what it is you're conquering today, and just beat it up. Make sure you're making progress on a daily basis, and progress does not mean P&L, although that's nice. It just means that you're actually chipping away at something every day that would make you a better trader. Good luck.